So the markets at the moment have been dealing with, I guess, increasing global growth concerns. And if you couple that with the unsustainable low yields or negative yields we have around many parts of the world at the moment, this has driven market volatility over the past while to quite high levels. If you add to that the political uncertainty, the US elections and some elections in other areas, we would expect that market volatility will remain quite elevated over the sort of short to medium term. Yeah, it's true. Equity and bond markets do feel relatively expensive, although once again there is some pockets of value. With us as multi-asset investors, we can access some areas of the market that your traditional managers can't. To give you an example, relative value. And relative value is where you are long one market and short the other. And what happens with a relative value position is it gives you a different risk dynamic or risk characteristic. Even if markets aren't going up in an absolute sense, you can make money out of relative value strategies by basically just getting the legs of the strategies correct. So we see opportunities in the currency markets at present. I guess with this growth-constrained world that we're in, a lot of the central banks are intervening in their foreign exchange rates, and we think this creates opportunity. And importantly, not only does currencies create opportunity, but they allow good risk diversification. To give you an example, if you were long the US dollar against some of the select Asian currencies, that can act as a buffer if China growth doesn't appear the way it should be and falls. These sort of the ideas offer some sort of buffer. Given the low growth environment that we're in, valuations seem quite fair to potentially stretched at the moment. So in terms of the way we're positioned, we have equity beta at sort of very historic low levels for us. But in saying that, there is some pockets, and we think Europe probably offers the best value. Europe seems to have less demanding valuations, and importantly, there is the potential for some positive earnings surprises that we think could deliver better returns in these markets. There's some value in select parts of the traditional assets, and if you can add some sort of other strategies, as we discussed, like relative value, you can build quite a diversified portfolio. If you add currencies on top of that, importantly, currencies can add some risk diversification, and if volatility does continue to be high, as we expect, this can buffer the portfolio and reduce the potential downside of returns.